Many prospective investors have been taken aback by the recent decline in Tesla's stock price. Many people have been terrified that Tesla is headed into a downward spiral ever since the firm released its fourth quarter earnings report. The price of Tesla's shares is now at a 3-month low. What does this signify for investors in Tesla? Is it okay to hold, purchase, or sell Tesla stock? See more by watching this video through to the end. Tesla is still making big moves in the electric vehicle market. Based on increasing deliveries, the EV manufacturer recorded a profit in its fourth quarter earnings report. This profit represents a record sum. In spite of this, the business still has logistical issues that impact the EV sector. We might observe in 2022 that Tesla's supply chain issues from the previous year would still be a problem for them. From the $1,200 per share price mark at the beginning of 2022 to the closing price of $829.10 per share on January 27, the share price has decreased by 30.9% year to date. This was only one day following the announcement of the financial result. Tesla announced record profits of then $2.32 billion, up 760 cents, and fourth quarter revenues of $17.72 billion, up 65 year over year. The electric car maker reached a new milestone for vehicle deliveries with 940,000 in 2021, with an annualized vehicle manufacturing run rate of approximately 1.2 million during the fourth quarter. The impact of shortages in semiconductor chips and disruptions in the worldwide supply chain hindered the outcomes. According to the manufacturer's presentation, Q4's persistent issues with the global supply chain, transportation, labor, and other production issues prevented them from operating their factories at maximum capacity. The corporation declared, "We aim to increase our production as quickly as we can, not just by increasing output at our recently opened factories in Berlin and Austin, but also by making the most of our already existing operations in Fremont and Shanghai. We believe competitiveness in the EV market will be determined by the ability to add capacity across the supply chain and ramp production. Over a number of years, Tesla hopes to increase car deliveries by 50 on average annually. But the capacity of their equipment, the effectiveness of their operations, and the strength and stability of their supply chain will largely determine how quickly they grow. These problems are not going anytime soon, but one thing about Tesla that is certain is that they are innovators to the core. The industry leader in electric vehicles may have a difficult year, but they are making every effort to overcome the primary obstacle. Their plants have been operating at less than full capacity for a number of quarters due to the industry's ongoing supply chain problems. Along with improving manufacturing at all of its locations, Tesla is concentrating on creating its software for self-driving cars. They have stated that one of the main areas of focus is still the complete self-driving software. Over time, their overall profitability is anticipated to accelerate due to profit generated by the software. When developed, self-driving software is a crucial element that will completely transform the sector. According to its presentation, it's crucial for enhancing vehicle safety and accelerating the global switch to renewable energy sources by utilizing more automobiles. Tesla has enough cash on hand to cover its costs as well as the goals it has for long-term capacity, growth, and product development. Profits from the software division of the company are anticipated to increase more quickly, even if the company will still look for methods to reduce operating and manufacturing costs. The new models from Tesla won't be released until 2023 because to ongoing issues with the supply chain. During the results call, Elon Musk, the CEO of Tesla, stated that the business used a significant amount of engineering and managerial resources to address supply chain problems last year. Additionally, the firm changed and reduced the number of semiconductors needed for car production, which allowed the company to expand output. Other automakers were forced to reduce output at the same time. However, even if Tesla had released a new model in 2021, the overall output of vehicles would not have altered because of supply constraints for semiconductors. And Musk has stated that the corporation would need to devote a lot of time and resources to the new product if it were to be presented. Due to the product's increasing complexity, fewer vehicles would be provided to the market as a result. The CEO of Tesla, however, has made it clear that no new car models would be released this year. He believed it would be absurd because the business is still having trouble acquiring parts for manufacturing. We will, however, do a lot of engineering and tooling and to create those vehicles, Cybertruck, Semi, Roadster, Optimus, and be ready to bring those to production hopefully next year, he stated. Based on an examination of Tesla's chart, the stock had a 76 increase in 2021, peaking at $1,243 during the day and closing at $1,229.91 on November 4, 2021. It is currently the fifth company with a $1 trillion or more in market capitalization. The stock price rose from $99.68 on October 22nd, when it was revealed by the auto rental company Hertz that it intended to order 100,000 Teslas by the end of 2022 in North America and install new EV charging infrastructure throughout its global operations. Musk, however, stated in a tweet on November 2nd that the company had not signed a contract and Hertz would not be eligible for a special rate if the stock price spike was caused by the announcement. On November 6th, Musk tweeted a poll asking if he should sell 10 of his Tesla stock. He also said he would abide by the poll's results, which showed that 3.5 million people, or 57.9%, had voted in favor. In November and December, Musk started selling massive quantities of shares as per documents submitted to the U.S. Securities and Exchange Commission, or SEC. The stock price fell below $1,000 as a result of the large stock sales, even though he has also exercised options to purchase shares. The decision by the U.S. Federal Reserve to taper its asset purchases and raise interest rates in 2022 also caused high inflation, which also reduced the value of the broader financial markets. The stock price rebounded above $1,000 at the end of December, and on January 3rd, reached $19.99.78 per share. Since then, though, the stock has dropped, with the SOP 500 stock market index down 9.8% for the year. The price fell from $918.40 per share on January 25 to $829, 10 cents per share on January 27 following the earnings report on January 26. MarketBeat reports that the average 12-month price target of the 32 analysts that have predicted the price of Tesla stock is $916.50 per share, with a high of $1,580 per share and a low of $250 per share. 10 hold recommendations, 8 sell recommendations, and 14 purchase recommendations were found. As soon as the findings were released, at least 6 investment institutions raised their predictions for Tesla shares. Citigroup kept its sell rating in place after raising its price objective for the shares from $262 to $313. While keeping an underweight rating, JP Morgan raised its price objective for shares from $295 to $325. Oppenheimer kept its outperform rating but raised its price objective for the company from $1080 to $1103. Robert W. Baird increased the target price from $888 to $1108 a share while keeping the rating of outperform. At the time of this video, saw technical analysis indicators on all time frames with the exception of 1 month displayed sell or strong sell signals on TradingView. We can continue to believe Tesla's impressive target trajectory for its battery technology manufacturing capacity, and especially cost, could help accelerate the world's shift to electric vehicles and extend Tesla's EV lead considerably. The statement reads, the information revealed that the moving average convergence divergence by AACE, the full Dasic exponential volume weighted moving averages, and the MACD were all bearish. Technical support was identified at $806 per share and dropped to $736 per share, while resistance increased from $876 to $946 per share, according to Wallet Investor. By the end of the year, the algorithm-based forecasting service predicted that Tesla's stock price will have increased and would be close to its previous all-time high of $1,237 per share. The stock may be worth $1,654, 22 cents by December 2023, $24.92, 72 cents by the end of 2025, and $29.50, 38 cents in 5 years, according to Wallet Investor. It's important to keep in mind that the stock markets are extremely volatile, which makes it challenging to forecast long-term trends and challenging to predict what a share price will be in a few hours. Because of this, both experts and algorithm-based forecasts are prone to error. We strongly advise you to do your homework and consider the most recent market trends, Tesla news, technical and fundamental analysis, and professional advice before making any investment decisions. Recall that past performance does not guarantee future performance. Furthermore, you should never invest more money than you can afford to lose. What do you anticipate for the future of Tesla's stock? Please leave a comment below.